Good morning, traders. It is 8:01 a.m. Chicago time on Wednesday, the 29th of July, 2015. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not indicative of future results. As always, a quick look at the news. Not much there. Won't spend much time on this. European markets mostly mixed today to higher, adding to Tuesday's rally. Asian markets close higher. The Shanghai Composite closes higher by 3.4% after being range bound most of the session. It had a rally into the close. Gold is higher, oil is higher, the US dollar is lower versus the pound, yen, and euro. Seems like a more of a defensive play overnight. The FOMC is likely to have a dampening effect on today's trading volatility until 1 p.m. Central when it's released. In summary, for today's FOMC, rates are unanimously expected to be left unchanged. The meeting seen by most analysts is a non-event given there's no statement or SEPs. All analysts look for small upgrades to the labor market assessment given the continued improvement, some looking for modest improvements to language around housing and consumer spending. No change in guidance expected as FOMC continue to keep all meetings on the table. A large number of economic releases ahead of the September meeting, next month's meeting. Next month's meeting is essentially going to have to factor in 2 non-farm payroll releases, 2 CPI releases, and 1 revised GDP release. Some are highlighting that the risk of a descent from Lacker or Evans are likely. Not much else to report. A few earnings yesterday, Twitter and so on, but you can look those up. As far as what we're expecting for today, at 9 o'clock Central today, we're looking for pending home sales, expecting 0.9% month on month and 11.1% year on year. Then at 9:30, we're looking for U.S. crude oil inventories at 700,000 barrels. U.S. distillates looking for 1.4 million, and gasoline inventories looking for 0. And then at 1 o'clock, we have the FOMC rate decision, again, unchanged. Not much after the close. After the close, the key release that we have after the close is Facebook today. Not much else on deck. So let's quickly switch gears and look at the overall picture on the charts. So yesterday, pretty interesting movements. I'll tell you what the hypothesis was for yesterday coming in. Again, these hypotheses are created pre-market, right here live, and you can always go back and review what happened versus what was expected. You can learn a lot from that. Yesterday, we expected responsive selling down into 2065. Failure to find bids at 2065 likely to push us down into the point of control at 2062 and a quarter, and that's what it did. It had a small bounce from 2065, just a point and a half. Where's my screen that I can draw on? So you could see it, 2065. A quick bounce right here. Okay, where's my whiteboard? Oh, hang on. Not able to use my whiteboard here. Just give me a second. I have to add this whiteboard back on. Apologize for this. Technology, always a pain. All right, yellow and thick, just the way we like it. So this is the bounce right here at a point and a half, very weak, could not breach the VWAP and the mid. And then we got our rotation down into the prior day's value. and gap close. Pretty good bounce there. Came right back up to the prior day's high, and it failed all the way through. So the expectation now becomes a lower low, and it did put in a lower low. It tagged the point of control to the tick, basically. Another small bounce, and then it failed through by five. What was it? 3 ticks before we had this really strong trending rally. And the primary hypothesis was potential bounce at the 65 area, and the second potential was for 62 and a quarter. A push through 62 and a quarter, and inability to get out would have us target would kick in hypo 2, and would have us target the value low of the prior day and potentially the low of the prior day. The target above, the key target above, was the naked point of control, which was at the 73.50 area. That naked point of control comes, I'll show you where that comes from. That comes from last Friday. So, but then during the Trader Bite, I said that the key target is right up here. The key target is this LVN zone from last Friday and this CLVN that we've left behind. 2082.50 was expected to be the extent of the move. From the low of 61.50, 82.50 seemed like a long shot for a rally day. So that makes yesterday, and we did push through it all the way up to 89. Very unusual for a rally day. This is more of a news move. So that was surprising. I expected on the far side, and this is a low probability target, I expected the 82.50 as an extended target on any push up. We knew that the market was ripe for a rally. I talked about this yesterday. We tested the MC point of control very well. We had a double bottom on the IB low, and we closed on a rally on Monday. The market seemed more very extended to the downside, very poor trading to the downside on Monday. But this is driven by something external, in my opinion. But it was surely pushing a lot of shorts out. And so it did get the 82.50, it did get the 73.50, and it did push through to 89 and into this next high volume node. Now, what has it done since? For one thing, we have a point of control shift to the top of the range. The point of control is right up here. It's this pink line. You can see that the point of control has moved down and has moved up quite a bit. Very, very strong trend. We have a point of control shift. We had a very poor high, so the expectation is for a higher high overnight. What it ended up doing is it ended up going to 93.75. Can anybody recall what 93.75 is? That 93.75 is the MC point of control for this entire range going back to February. So what we did is we broke through it on the on our way down, and we came right back up to it. There it is. It is the most valuable price in this composite zone, in this balance zone, and we hit it right on the head overnight. So you've probably noticed over the last week or so, these levels have been pretty solid. And the reason, in my opinion, they have been is because there is there's not that hand of news, external news, messing with the market. Believe it or not, this is what a properly auctioning market looks like. It tests its areas in a methodical way, back and forth, and it's fairly predictable in nature. It's when you have Greek news, China news, or other news that things get a little bit more. The market is very methodical here. We have a pullback. We have not reached the 50% of the pullback yet, and we're trading right here at 2088. I went ahead and drew a micro composite from the high so I can see what areas were auctioned, were accepted or rejected on the way down. I think you might want to do that. Key area above is that 2089.50. We got to 2089, and then the next key area to test up is the LVN around 2103.50, and then the point of control for this slide down is in the 2106 area, so we'll be watching for those levels. This is the most recent auction, and now that we've turned back up, we get to draw this micro composite around these bars to see what kind of volume occurred on these daily bars. The bars that you're looking at are regular session, regular trading hours, pit hours, and each bar represents 1 day. So just highlighting how this overnight high came into play, and let's look at the overnight session. Here it is, the Asian session, very noisy, not much going on, and then it rallied into the close, and then we moved on to the European session, and you can see here pretty decent high, pretty decent taper on the overnight profile, pretty balanced profile, and has now fallen through the mid and is battling this this area. It's the overnight inventory balanced itself right here, so you can see it's come back to where value is. Yesterday, the point of control of yesterday's right there, and has stabilized. So the overnight session has come back to where it started from, and so now we don't have much to go on based on the overnight session. We just know that there was a pretty decent taper on the top, a balanced profile, and so what that means is it's likely to be a pretty choppy open. There's not much advantage either way up here. I do expect, because of yesterday's rally and the fact that we have our energy up top, I do expect a higher high of some sort this morning. Overall, I'm looking for, as a primary hypothesis, I'm looking for the market to trade this area, push for a higher high, and then I'm looking for it to potentially retrace some of this move down. The gap zone that we had here from the 13th is no longer valid, so I'm going to remove that. We've tested that gap zone from below and above, and now it's gone. So it's as far as what we're doing for today, I'm really looking for it to be quite choppy. With the FOMC coming along, anything can happen. So today's a good day to just be very, very picky. Trade less today. Trade less today. Pick your spots carefully. Don't overcommit. Let the FOMC come out at 1 o'clock Central to Eastern, and then let's see what the dominant force is and what areas it wants to test. If we look at yesterday's profile, market profile, that is a TPO profile, we can see that it's got quite a few singles beneath, incomplete auctions essentially, and so any bad news from the FOMC is likely to bring us all the way down to 73 or so. Any good news is likely to push us back through into the 93.75, and then keep us going up towards the 2106 area that I talked about earlier, 2103, 2106. So today is given the fact that this profile is so thin, a typical trending profile, and given the extension of the range here and the unusual range that we got yesterday. Yesterday we got 27.5 points. The first standard deviation is 21 and a quarter. The normal range for the S&P is around 9 and a quarter. And the second sigma, or the second standard deviation, is 36 and a quarter. So we had an abnormal day, but not an excessive day. So I'm looking for this to test higher and then do a lot of this this morning until the FOMC comes in. Remember, this is a hedge product. A lot of funds and so on are going to hedge their positions using futures, or are likely to. So don't be surprised that if we get some pretty strong rotations one or the other, especially as we approach the FOMC this morning. One thing I want to leave you with here, there's a Trade Wisdom segment today. It is Wednesday, another episode. This one is really important. I'd really like to encourage you to take the time to listen to this. If you want to embed it in your blog, that would be great. If you want to link it, retweet the tweet later that I put out, it'll be great. I just don't think enough traders know about success in trading as much as they do. A lot of people come in with a misconception, and I want to, today's segment is to try to adjust that. Just adjust expectations and so forth. You may not like what I have to say about it, but it's the truth, and this is coming from someone with a background in backing and training traders as a prop shop. So I've seen a lot, and so it's really important for you to keep an eye out for the tweet on that and to watch today's Trade Wisdom segment. I think it'll be useful to you and help tweak your approach to the market. Good luck today, and I'll catch you tomorrow.